A very warm welcome to all our viewers on this Monday morning on the 12th of June 2023. After our previous episode, and this is our fresh new episode, a lot of things have moved in the market, particularly the OPEC Plus meeting, which concluded with two big announcements. One, the continuation of the cuts announced in April, and more importantly, 1 month voluntary cut announced by Saudi Arabia for 1 million barrel per day. This is unprecedented and interesting. So the further cuts only by Saudi Arabia. Everything else remains as per their April agreement. So we'll come back to this later because it portends, indicates a significant back channel arrangement between the Saudi as the leader of the OPEC Plus and the Russia, which have, as per the market analysts, kind of conflicting interest. But we believe the conflict is actually not there. They are just managing it in a way which is beneficial to both of them. While the markets have not really responded, the crude price last week for the Brent closed at $74.6, which is still lower than when this cut was announced. So what does this indicate? We need to get a little deeper into it. We have seen the fresh new data coming in, wherein the Iran exports are at 1.5 million barrels a day, which is amongst the highest in the last few years. So this indicates kind of excess supplies in the market. And when we look at the supply front, not only the OPEC and the OPEC Plus, but the non-OPEC supplies are also very robust. So we can safely reiterate what we have been maintaining all along ever since the beginning of the year, that the markets are oversupplied. The demand issue are really staring at the market much more glaringly than perhaps in the first 6 months. So we continue to believe the demand outlook would continue to remain bleak. China's story will continue to unwind on the disappointing side, and the market supply situation from the current surplus, there is a risk of getting into a glut situation, wherein all this would impact onto the prices. And not to forget to mention, the recent news about the revival of the US-Iran nuclear deal. We believe it is not having much of legs, and particularly when Iran is able to manage to increase its exports of crude oil in such a significant manner. And not to forget, just last week, US has announced secondary sanctions on the 15 additional Iranian tanker oil companies. So currently, we would not pay much attention to the Iran nuclear deal revival talks. Supply situation has a risk of getting into a glut. Price situation, we strongly maintain we are headed for around $65 to the barrel for the Brent prices in the coming 2 weeks. So thank you for this episode. Thanks for tuning in. Thank you.